Yo, what's up, guys? Welcome to Paper Flow. We have a lesson for today, and we're talking about Pennant. Okay, we're talking about just one continuation pattern for today. Okay, and then how to trade it with relation to other blocks and how we use it in confirmation to prices move. Uh, yeah, on in a way of knowing where price is going. You understand me? Yeah, getting the direction clearer. See, so let me go straight to the point, and with that, we're gonna go straight on a whiteboard, and then I give you what we have to look for, and then how we are going to apply the same concept on our chart. Okay, so I'll always start with my blackboard, my whiteboard, right? And let me give you what you should look for. Now, Pennant is or symmetrical triangle are a way of reading price, okay, from one direction to the other. Most of these setups or this particular market structure um, shows itself, or mostly they show themselves as divergence or as a continuation pattern. So, example, price moving from up, coming down, up, down, up, down. It start to convert. It start to consolidate. Maybe it wants to turn around. So, what will it do? It gives you that, and this is an example of how it could be. Okay, this is how Pennant looks like. Okay, something like this. So with this, if you have a trend line and you put in your trend line, if you have something like this, a pennant is more or less like a symmetrical triangle, right? The rejection points are never on the same levels. Okay, so let me use the real line to make this drawing clearer. Okay, price is dropping, and price at the other side is also what, bullish. Okay, so with this, it's very difficult to determine where price is really heading towards, because price is hanging in one area. Because if I put in an arrow from here, you could see price did not touch, or price did not break the previous high, and this is the first low. Price did not break it. We have what, a lower high, we have a higher low, we have a higher low, sorry, so we have this higher low, and then we have what, a lower high, telling us that price is what, squeezing, right? So this alone is what we get to understand with symmetrical triangles or pennants. All right, they have the same property, and how to trade them and how to take your profit. Right, so let me take out some of the noise. With symmetrical triangle, all you need to do is to look for the breakout where price is going to come out from, and that is where you will be able to determine where price is going to. Secondly, to after price breaks out, you need to ask yourself, look at the left hand side or your left hand side to see the possibility of price going to that particular direction and why it should go up there, right? So with the principles of order block and liquidity gap and all of that, you could see that here price is almost touching the uh, the rejection point, or the retracement also almost touching here. And with this one also, you could see we have the retracement, not, there's enough, too much gap down here. That's another fact that makes you look at price and anticipate that price could really go as low as that level. Secondly, too, you have to look at the other side, that, oh, what happened at the other side? Is price really in a good setup? Okay, because we should have something like that. And if maybe you have a long, gap or something that is not filled, you might like to know the reason why price will get there. All right, so that will help you to fake out, to identify fake out in symmetrical triangles. All right, now how to taking your profit, okay, or how to determine where price is going and how far it could go, you use the highest to the lowest area in price. First, you can decide to draw a line here for the highest and you draw a line for the lowest. Okay, with this, you have something like a channel. Then you can now calculate your TP, the highest point to the lowest point in this channel, and you carry it and you place it on the breakout. So this, if it breaks out from here, you place it here. If it breaks out from here, you place it here, right? So that is what's going to confirm that your trade is good or is gonna go to a particular area and or not, and the reason why you get it. So now let's assume price broke out from the low over here, giving you a breakout and maybe a retracement. Okay, this retracement is your entry. Now what do? You take your TP calculator and you ask yourself, first you ask yourself, why should price go down? Okay, there is a gap here, so price would like to do what? Fill the gap. Maybe you have only bullish candles here. I'll go to the chart after this, then you can have a look at it and see if it's okay for you, or if you really understand what I'm trying to elaborate to you. So now I'm gonna put my TP calculator on the breakout, okay, on my Pennant, and I put it on the breakout, and I'm anticipating that price should come as low as this area. Okay, so with this, I can decide to put my TP, because of spread and other things, at least 80% or 90% of the TP calculator, so that no matter what, at least I should be able to hit my profit or my target before anything happens, because mostly there is manipulation in price. Right now, at a scenario that price doesn't opens at the high, right? So let's say price gave you something like this, comes to retrace. Now that will be your breakout. You look at the left hand side, why should price go up? Maybe if you look here, there is a gap here, right? Then you could understand or believe that price is going up. If not, if there's nothing there, I would advise you to hold on to that trade and leave it, because if there's nothing, which is liquidity, market makers will not go there for anything. To understand. So we'll take our TP calculator, we put it on the breakout, and it looks like we have all the way, price could travel all the way down to fill a gap. To understand if there is a gap there. Now I'll go to the chart to explain further. Before I go there, let me just put something clear. Let me make something clear over here, that the reason why we get consolidation or this kind of behavior in price is because the buyers and the sellers are trying to pick liquidity by competing among themselves. The buys and the sell strength, right? The number of sellers here, okay, with their money can push price down. The number of buyers here with their money trying to push price back up. The more sellers come in, increasing the volume of sell pressure, bringing price down. Volume of buyers also start increasing until one of them gives up. That is when price breaks up to the other side. Now, there are instances in which there are what we call fake outs. Okay, price could open or go outside a trend like this and also still find its way back into maybe a sell position to drop. Now, it's up to you as a retail trader to think like a market maker and be able to detect all of these traps, right? So with the help of other blogs, that is when you can really detect these kind of tricks in price. So now I'll take you to gold, because there's something similar there right now that I want you to use that to determine, to even see what gold is really up to. All right. So I'm taking you to gold, and let's see what we can do with gold this time. My chart, there we are. Okay, so this is gold. Let me go with 4 hour. Okay, and let me zoom out so that we can have a proper view of what price is really trying to do. Let's see. Okay, now if you look at gold properly or carefully, let me go into a daily chart and see if I can get a proper view. Okay, I'll start from 4 hour, then we proceed. If you look at most of my analysis on gold, I'm using the same concept for gold right now because this is what this is the data I have now. So I'll use this type of strategy to analyze it. If I see price in another form, I'll use the same another strategy for it. Get me? So this is what I see for gold, and let's get started. So I start identifying this push and then this push like then. Okay, my price is not able to take out this high. It gives me a rejection. Then it gives me a rejection. This low is not lower than this low. So I start putting in lines. We have a rejection. We have a rejection and a rejection. Okay, so what do? We start putting in lines to identify the push. Now, this is our impulse drop. Price came to retrace on it. So 0.1 to 0.2, and I stretch it. You could see price did what? It broke out of it from here. Someone will say this is a change in market structure, so I'll start buying, and you'll be in trouble. So while this is done, you will continue to start putting the other lines together. The next rejection point was this low to this high, and I start stretching it in, giving me a straight line. Okay, so this is what I have. Price will never give you a clean slate or a clean sheet for you to work with, so it will keep on manipulating, and you'll be confused because over here you could see price has broken, and you say what we are what bullish. Okay, but you could see this is what fake. Now, when you come back to the same area, you draw this trend line. You say, okay, price is what bearish from here. You enter your sell, and patience alone will not allow you to be in this trade until it starts dropping, because it has started giving you higher lows over here. Okay, so with time you cannot. This is a 4-hour chart which gives you my session is going to give me weekly sessions. So if you are in a sorry. So if you are in a sell here, right? You're in a sell here. Price is buying for 2 weeks. Do you have the patience for, let's say, a week plus 3 days? Do you have the patience to hold on to the chart? No, your account might not be able to hold. So you need perfect trades to be in. You understand? So now I'm going to help you read the chart clearly. So now this is what we do. Let me add my trend line from here to here. It's a breaking market structure, and you could see it from here. That with here alone, you decide to sell because you could see that price is still what giving you lower lows, and they will not let you get a clean slate in trading here. So what do? We need to start reading price the proper way. So you then start to plot this point to this point and stretch it in. This tells us that price gives us what? An impulse drop, which is this one, and they started consolidating. The buyers and the sellers start what? Competing, or they start battling among themselves where price should go. While they do that, they then do what? Confuse we the retailers. If we think like retail traders with the basic concepts in trend lines and other basic trading concepts, we might not go far. So we have to think like them. So with the concept of this same Pennant or symmetrical triangle, we put in our first we have a drop all the way down but we can identify a pennant, which is a symmetrical triangle. We start from this low. Let me mark it. We start from this low to this high. That is where our symmetrical triangle starts from. So when it breaks out, you are going to calculate your low to your high to be the exact distance the price will travel before going wherever it wants to head towards. It's up to us to be able to get the possibility or to manage the trade. Is very, very important. Now, price is bearish here, but with the help of other blocks, we know that this is a break in market structure, retracement, and a drop. So with this, our entry is around this area. You can DM me if you want me to have a personal session with you on how to trade the other blocks properly, and I'm willing to help you. So now, you put this TP, which is the distance from the basis, the widest part of the pennant to the breakout of the pennant, and that area should be your TP point. That area should be where you take your TP. Now you ask yourself, why and how possible is price going down there? So this is what we do. If you have enough in your account, you enter 2 trades. That is what we do. Your um, one trade, you have 2 trades. The first TP should be the low of your symmetrical triangle or 50% of the push. That is how we do it. And then your second TP is going to be the last level where you want price to get to. Then whilst price comes, price will not just drop like that. You get it. So price is definitely going to play along for a while to see how confident and how patient you are in understanding this business. So you paying yourself first on the first TP, you are out of the game. Your second trade is still running to see if price will really take you to that area. If it comes back up and you are out, you were able to milk something for yourself. This is how you can manage your trade as a good trader, trying to think and be part of the winning side of the game. You understand? So with this, this is how I trade my pennant in a ICT and market structure or chart pattern view. So this alone, I believe it should help you to understand the system. And one final thing is that anytime price travels, okay, giving you swing highs, swing lows, there's something you should look at. Let's say you are in a bullish scenario. Price swings high, swings low. What does it do? Price is filling gaps. Okay, all of this gap, it will fill it. It might not take out this low, but it will fill a gap. And when it's going up to fill a gap. Is that not it? So that is what it does all the time. So when it's bullish, it will be taking out the highs. Okay, as usual, filling gaps, taking out highs. When it's bearish, it will be filling gaps, taking out what? Lows. That is all you need to look for in a FX or in a chart pattern. So you could see that over here, price dropped, right? Now, you could see that we have only bearish candles, plain bearish candles. So price decided to do what? Fill the gap. Whilst price bought to fill the gap, it left what? Plain what? Bearish, plain bullish what? Candles over here, and it sell to do what? Fill the gaps. And while selling, it left what? Plain candles there. So it's just a zigzag thing that price is doing. Now over here, you could see price dropped and left a plain gap over here. It came to fill portion of it. It is up to you to deduce and understand how the system works. If you understand how it works, you know how to apply all the concepts, including the pennant and the triangles in addition. And as I said, if it gives you a direction, you look for all of these things, and which will guide you to get a possibility or to rate how high or how possible price is going to get to that area. So now over here, you let me see. Okay. Now I'm about to show you the reason why price could go down more or go up. Now on this chart, to confirm our TP, which is the final TP, which is this area, we need to look at the possibility the price will get there. So with the help of the actual setup lines, um, join it with the actual um, tools, then we proceed from there. So now what do? We try to look at the possibility of price going down. If you look at your left hand side, price traveled from somewhere to somewhere. And where is that somewhere? Price started giving us what? A consolidation here before breaking out. This becomes a stronghold when price is coming back down. This area becomes very solid for price to break, right? So what do? After that, price started giving you only bullish candles from here to here, and this area was never recovered. But from here to here, you have bullish and bearish candles. That means it's recovered its side, as in the left side and the right side in smaller time frames were covered up. Now this place, you see it was covered up with this wick over here. Now we have this bullish candles here, which were covered up by this drop. So now if you look at your left hand side, the only place that is not covered up is this area. Okay, so what do? We are expecting price to cover this gap. We call it liquidity gap, and that is what price is coming to do, because it is now giving us a bearish direction, because it's showing or it's pointing downwards. That will be confirmed as we say when there is a divergence in price. For now, I can say on this chart we are not so clear about the direction yet. Okay, but if price breaks this, then I am going to say it is coming to fill this gap. Okay, but if price doesn't, from here, in a way of understanding this system, then I mean price is coming to complete this gap. Where is that gap? This area. Okay, so if price doesn't go up more and it comes down, then I am thinking it's come to complete, because there's even another gap here. It will like to come and complete the gap, and if it will keep dropping, then it's come to what? Fill what? The gap. So you look at all these things to confirm and ask yourself if price will really fulfill its promise of selling to our TP calculated by our Pennant. I believe you follow. So this is how I trade my Pennant, and it's a bit technical, but as time goes on, with a wider stop loss and with the concept of swings, you will definitely know and understand where price is heading towards. Okay, so yeah, if price is bearish, you could see highs were never taken out. So if you believe it's selling, if you are selling from here, definitely your stop loss is going to be at this highest point, so that you can make your money. So this is how I trade, and I'm hoping that you learned something from it. Don't forget to like, subscribe, share. You can DM me if you want to do business. All the best. Thank you, and let's make the pips flow. Enjoy yourself and take care.